already starting to displace. There's your new swing high. Let's see if you can close above this order block. Use that as support. Another 20 points potentially off that. Already looking solid though. Now this down closing candle, this inversion for value gap, and even if you wanted to consider these as down closing candles too, that should also support price. So really I don't want to see a trade below, obviously this swing low. You probably could drag it up to here, 15,843. That would also be fine. Watch the down closing candle in here. It's close above it. That's 2 lined up on top of each other. Should get a strong reaction off that. But kind of just chopping around this swing high point right now. Tapping into the order block there. Now we still have that orange folder news at 10 a.m. So in 5 minutes roughly. I don't know if it'll bring tons of volatility. Let me actually look on Financial Juice and we'll see if it's a red folder listed there. Yeah, it's not, so we're fine. Still tapping to this bullish order block here. Can actually move this. So here's your 20 up here. Definitely a rough day. If you wanted to just skip out today, I don't blame you. See, did we get into discount? I don't think we did. Fell short of discount there. Yes, definitely way more bullish. You can see we filled the fair value gap. Closing above all these swing highs. Order block there. Should also boost price up. So should be looking at the same thing on NQ. I want to see another set of new highs. We got to watch the S&T divergence there at the highs too. So if ES comes out, sweeps out the high again, NQ fails too, that's a good sign that probably may start to reverse just for the short term. Obviously a lot of sell side building up. We got a nice 930 sweep, so not relatively equal down there like we saw with this though. Look at the SMT here. So SMT down here. If you were to watch, I saw also liquidity pool. It's just like we saw yesterday, right? With that buy side sweep. If you were on the stream, we had that 930 equities open, SMT divergence with the RTH gap above it. So that's one thing you need to watch out for. If you see SMT divergence form with the equities open and it sweeps some sort of pre-market liquidity on NQ, and let's say it doesn't sweep it on ES, you have to be very, very cautious to watch for potential reversal back towards that level. Because a lot of times price will come and retest that level, especially if it already meets the objective. So what I mean by that is we have that salsa liquidity pool down on ES right here, right? So 930 equity open, missed this low from 914, got it on NASDAQ. Now as we trade further up, reach into potentially, you know, this line up here, buy some liquidity level, anything like that on the upside, that could put us in a potential reversal condition. You'll see us trade back lower, disrespect the bullish PD raise on the way down, and then this would be your nice strong liquidity with SMT. So specific times where you see injections of volatility, here's your 20 points potentially. When you see specific times where injections of liquidity are expected, so 9:30, you see have the equities open, 10 a.m. sometimes. you know, even 8:30, things like that. Specifically, more 9:30 and 10 o'clock. That's what I look at. So 9:30, I'll look for, you know, strength and weakness in the market. About to get the 20 points off that, by the way. And there is the 20. Oh my gosh, you just wicked into it. Come on, just smash through. So yeah, so 9:30, you want to see the SMT divergence. 10 a.m., you want to look for SMT divergence. Anything that's like a time-based setup, really, you want to look for SMT divergence. Still looking for this to pop up through there. A lot of times when indices are not paired up to, you'll see that 10 a.m. either a news driver or just 10 a.m. Past that, you see indices typically start to line up. So we got another new high on NQ, new high on YM, new high on ES. So we're still looking fine. Obviously, all these order blocks here are holding price up on ES. Right, see how we're in this expansion leg, down closing range, confirmed, down closing range, confirmed, down closing range, confirmed. All that is supporting price up. The down closing range. I want to see it pop up through there. At least by 5 points or so. You get the 20. I mean, if we can't get it, we'll look for closing out. Watch this bisi here as well. I think we might have just wicked into it. That would also be fine. As well as a potential 10 a.m. reversal. There we go. There's your 5-point run up. So I'll take a screenshot of that trade idea. Let me actually zoom this up. So nice order block tap there. Could have used that as an entry point. Could have used this down closing taps into there and sped up to the upside. So here's a screenshot of that. Kind of a rough trade. Entered like what, 5 contracts, something like that. So I'll send that over. Send a screenshot of this as well, just for the context. Predicted chat. So watch this bisi as well. No, I'm not really interested at all. Got the 20-point run up, multiple different opportunities. Obviously 20 points from here as well. If you want to use this down closing range, 20 points there, 20 points from there. Plenty of opportunity. Demo or live. Hey, for all legal reasons, this is all on demo. But hypothetically, I do have funded accounts in Minecraft, you know, so in game. Yeah, I don't want to get sued, you know what I'm saying? But yeah, I do have funded accounts. Oh, in Minecraft, yeah, I did take it. Yeah. Then we're chilling. Yeah, that's the screenshots there. Works for me, my man. Waiting for 1050 macro. Yep. See you, my man. Hopefully we get some better price action there. Now, one thing I do want to say about the 1050 macro is if you have consolidation between 9:30, so sometimes you have consolidation in the opening range, right? Between 9:30 and 10 o'clock, or between 9:30 and 10:30. You have really, really tight consolidation sometimes, or just kind of range bound. That 1050 macro becomes really high probability. So if you want to look, you could look back at the 5-minute chart. I think I did this yesterday on stream, right? So just probably accept will continue to climb. Look for the ES 4515 has a potential. I'll send that to send this to predictions chat really quick. So if you want to look at opening range stuff, what I do is between 9:30 and 10:30, once that 10:30 candle is done forming, you switch to the 5-minute, and we'll go and look for PD arrays within that kind of just like 6 or so candles. And then you start using them. So if you look here, let me see if I can get an example from yesterday. We're still kind of just climbing up. So if you're in a long, it's looking good for you. So this is the 5-minute here. You can see, so look, between 9:30, this line here is on 10:30. You also, by the way, if you're using the ICT kill zones and pivots, if you take a look at this and scroll all the way down, you can put these timestamps on. You have to do 1 minute. So if you want a 10:30 line like this, you just put 10:30, then 10:31. You can do it with any of them. Obviously, change the style, things like that. But here's your opening range. This is the 5-minute chart. This is from yesterday. So not a huge extended range. So we're not expecting a retracement, into a 50% of that range, if that makes sense. So if you get a large opening range between 9:30 10:30, a lot of times you'll see turtle soup. So a sweep of stops on one side and then we return into 50% of that. But see how we're kind of stuck in this high to low here? A lot of times, there we go. A lot of times you'll see PD arrays that form within this time window here. So if you can see, we have this order block that forms. We already have bullish price action. We have a drawn liquidity of the new week opening gap and this bisi liquidity up here. Already took out sell stops. Already dipped into a higher time frame PD array of this 15-minute fair value gap. Okay. So 1050 hits. So here's your 1050 macro starting right here. Let me switch this to orange so you can see. What do you see? You see a order block here. So down closing range confirmed by these two moves up. Right at 1050 we tap into it, also tapping into this order block. And that's your expansion up. Entry given there, expansion up. If you look at the 1 minute, we'll do that and then we'll go back to current price just super quickly. I just want to showcase this. It's definitely high resistance, but you can see on the 10 o'clock, tap into that 5-minute order block, and obviously those higher time frames will take priority. So if you see a 5-minute order block, or you see a 5-minute fair value gap, where the candles close, I posted this on the Q&A post last night. Candle closure on those higher time frames are more important. I think I use this the same exact example. But that candle closure on the 5-minute you saw was bullish, right? We just saw wicks off of it in closing. But on here on the 1 minute, it's definitely hard to see. So if you see these high resistance liquidity runs or it's just low probability conditions, switch to the higher time frames. It's a little bit easier. But if you look at this 1050 to 1110 macro, we have a fair value gap in here. We're expecting bullish prices, so you want to see this support price, right? You could use that as your entry. You could use, so this move lower, we dip into the fair value gap. You want to see, okay, maybe we'll start accelerating out of it, but you're not sure yet. Trade lower, candle closure a little bit more bearish than you want to see, but we start trading back up. In this move lower, if you see this as a fractal market maker model, this down closing candle is a bunch of selling orders. So once they start to see profit, you really don't want to see, candle bodies start closing past it. So you have short orders in here. Obviously, if you form a market maker model, this is a different topic for later. But got down closing range, came up, closed through it with this candle. Let me tap back into there. You can see if I highlight the entire candle, candle buy staying above 50% there. Right, there's your midline. Candle buy staying above 50%. Could use these multiple taps as your entry long, just targeting even 20 points. Easily smash through there. Or if you want to target the buy side liquidity from here, good 40 points, and then up to the new week opening gap, 47 points. So that could be a model in and itself. That could literally just be your model if you're trading 1030, 1045 kind of stuff. That's typically what I just start to use. So we're trading back lower. So you got to watch now how we want to use this bisi. I don't think NQ Yeah, ES didn't reach their top, so we'll watch now. Obviously, time is important, so we'll wait for 10:30. I'm not too interested now. But yeah, that could be your model in itself. You wait for 10:30, and then between 10:30 and I would say maybe 11 o'clock, you get an entry towards the New York AM high or the New York AM low, which is annotated here. So between 10 and or 9:30 and 10:30, you'll have these lines form, and then you want to basically just be targeting that higher low. Between 10:30 and 11 o'clock, you'll get an entry towards it. That doesn't mean it'll sweep it out at 11 o'clock. Sometimes you'll get extended moves where it only sweeps it out at lunch. But I want to say majority of days, like I feel like 9 times out of 10, you'll see a sweep up. Let me actually move this. Watch this fair value gap up here, the sibi. Okay. Close below this old selling. If we wick down lower, it's a good sign. We might want to reverse. I'm watching it right now. Just looking for this swing low potentially. What was I saying? Yeah, 9 times out of 10, I feel like you do get that sweep of liquidity, either the AM high or the AM low. And you can form a model just around that. So you could use the 10:30 to 10:45 as just kind of a continuation towards that direction, or you could use the 10:50 if it's still kind of choppy. 10:50 becomes very, very high probability if the 10:30 to 10:45 window doesn't give you anything. So it's kind of like I guess you have two proper entries in this AM session if you want to really, really strictly use time. You have the 950 macro, and then you have 10:30/10:50. So it's kind of like a large chunk of time that you want to look. Obviously, between kind of like 9:45 and 9:55 really is kind of outside of it, but watch where these candles close. We're still closing below this inversion order block. There's one candle above it, but still closing bearishly of this sibi though, right? So that kind of takes priority, this right side chart. Inversion for value gap in here as well. So I'll go with order blocks. Can't use order blocks at all. Breakers and fair value gaps. Yeah, that's really all you need. I started using, I never used to use order blocks. If you just look back at the old Livestream recordings or really any of my models, I never used order blocks. I used to strictly use fair value gaps for the 950 macro. I mean, I use that for basically, I don't know, I want to say 6 months or something like that. Then I realized there's so many models or there's so many different entry opportunities that form that really you don't have a fair value gap that even fills. Because if you look at this 950 macro, right, if you wanted to capture any of this upside movement, we had no fair value gap that really filled. Obviously, there's this one, but we traded all the way through it, traded it back up. So then you'd be waiting for another fair value gap to form. Really nothing in here, right? We have this one, doesn't fill it. This one doesn't fill it. Yeah, it's super, yeah, exactly. It's very useful when you're expanding. So if when you're already expanding, you want to basically just be looking for those, candles to support price. And if we disrespect it, that already tips your hand to, okay, we're going to be looking for potential reversal, potential retracement. So if we were to, come down and violate these order blocks, you're going to be looking for, that's basically just a breaker, because breakers are inversion order blocks. So if you think of every single disrespected order block as a breaker, that also can help because you can look for the drawn liquidity past that. My problem is what constitutes an order block and what is not an order block. That is true. It is kind of arbitrary compared to a fair value gap, right? Watch this short-term swing low here. Yeah, I don't. There's a lot of definitions. Like people will have like the wicks. Some people will include the wick. Some people will include That's why I never really liked when ICT explained it, because he would always draw it in a different position every single time. And like every single time I would try and learn it, I would watch a new video by him and it would be a different point where he's drawing the order block. Like first he uses, it's consecutive down closing candle, then it's the last down closing candle before the move up, then it's, oh, you want to use the wick because it's the most. So for me, I kind of just threw everything out the window and just kind of started fresh. Um, Obviously, rejection blocks, things like that, are a little bit harder for me, but kind of the rule of thumb is I use the candle body strictly. So any wick, unless it's completely obvious to me, I don't use. So when I'm drawing order blocks out, you always see me draw it from the candle body, right? That's kind of where you want to see that reaction of, because I feel like most the wicks are just the mohawks and they don't really matter as much. So if you want to see a good reaction, it's going to come off the body. So I don't constitute the wicks as an order block. Sometimes when you have these really, really large wicked consecutive order blocks, I'm trying to find a good example. Like this, we have tiny candle bodies. If you wanted to, you could extend this all the way up. But like, you see how such a wide of a range that becomes? It's very, very hard. Obviously, this is disrespecting 50% of this consecutive order block. Oh, actually, I drew this wrong, didn't I? There's your true order block. But that's such a large range where it's not really helpful in any sort of precision. So I just used the candle bodies. I feel like that's more precise. Even if it wants to come down like this, it's still respecting the bodies. So candle bodies 1. 2 is consecutive order blocks will hold better than singular order blocks. And obviously those larger candle bodies, the larger you get, typically the better you are. So like this. Large non-closing range, close above it. That's a valid order block in my opinion. Here we have a consecutive down closing range, right? So this here is one entire order block. And then once we close above it, you want to see its support price. In the move up, obviously in the move up, until the drawn liquidity is hit, all of these order blocks should hold, or until we want to reverse or retrace, something like that. Then if you want to get even more specific, if you want to look within this range, from the down closing range, each of these candles specifically are their own order block. So if you look here, right, we have this range here. This last down closing candle, we moved up, closed above it. So that should have validated this order block, and it does, right? We come down, we can do it again, right, and we close back above. And then this candle just validates this one and this one, but then it validates this entire chunk. So it's kind of difficult to learn if you want to pair that all up, but the easiest way to learn it would just be to use the largest candles that are obvious to you. So like this is an obvious order block, right? You can see we support price there. Obvious consecutive order block there. We can use that, draw that out. And it's the same thing with obviously the bearish green candles. So when you're in a expansion move lower, typically once you see that first order block respected, it's fine. And then you can start using the the green candles. So if I want to see how we close below this this range here. So then we have an up closing range here. We close below it. Now I'm watching to see if this now rejects price to going lower. Okay, so it's validated. My definition of validation is we close below the body. Some people, I know someone left a comment on one of the videos, I think it was yesterday's video, that he uses the wick to confirm the order block. That's fine, but then you have to use the wick when you're drawing the order block out, if that makes sense. So if you're using the wick, if you want to see a full closure past the wick, then you need to drag your order block box, from wick top to bottom. But that's such a large range where I just feel like it's not really as useful as just using the candle bodies. Obviously, it's only going to matter when you're in expansion, so drawing an order block from something like this is tough because we're in a tight consolidation, right? So you're going to see these numerous candles just trading up and down. What you do want to see, though, is when you're in consolidation, drag a fib on top of 50%. Let me actually clean this up. That's as clean as I can get it, I guess. Yeah, you drag your fib on consolidation, and then once you start seeing these bounces off of 50%, a lot of times, watch for a potential sweep of this short-term buy side, by the way, like that. You see multiple bounces off 50%. The order block that forms in the process typically will hold. So we have this down closing range here. We'll watch to see. But internal range buy side liquidity sweep, filling a parenting range premium right up in there. So we could be watching for external range expansion to the downside. But everything outside of time doesn't matter. So 1030 is right there. Hopefully that somewhat clears it up, maybe not. But yeah, it really only matters in expansion moves. It matters once you have those larger candles. Like in here, it's hard to use any order blocks. Like this is an example where the fair value gap takes priority. Clear fair value gap, not really tons of clean order blocks in here in consolidation. But you can see once we started expanding, down closing candle respected, down closing candle respected, close below, right here, below the this order block, right? So then we use it as inversion, old selling. You can see the candle bodies, boom, jump up against that twice. And then we continue to the short-term sell side. Then we see reversal. So that's the liquidity. So you see a reversal. You want to see these up closing candles start shooting up, and then the down closing candle supporting price. So we have down closing candle here, supports, down closing candle, supports, down closing candle, supports, down closing candle, supports, down closing candle. You get the idea. So there's your buy side liquidity sweep, looking for expansion towards that green line. There's your sweep of liquidity. So that's kind of why you also don't want to trade stops, trail stops, to the swing high that's formed in an IFVG until we, within a fair value gap, until we leave it. So until we see this continuation out of the fair value gap, don't trail your stop that tight. So you could have saw this run up. Maybe entered short there. We saw this trade lower, maybe here. Trail the stop. Then you come up, get knocked out, and then start trading back lower. So until we see this clear closure like this, where we're starting to expand out of the fair value gap, don't trail your stop there. Keep it here. If you want to take a partial off at 20, that's one thing. But if you don't take a partial off, keep your stop up here. That sometimes you can see this sweep of internal range liquidity and then external range expansion like that. Okay, so then once if it's 20 points from here, if you entered off the IFVG, say it's 20 points, take a partial off, then that's one thing, trailer stop. You could also be looking for the swing low down here. I'm liking that as well. AM low. So obviously once we hit 1030, that 1030 candle forms, we'll switch to the 5-minute chart and then look at that. 15-minute gap, still this huge gap lower. I would say if you want to learn, this applies to anyone, if you want to learn order blocks better, take your model and start backtesting it with strictly just one PD array first. So start looking at the fair value gaps, get like 20 screenshots of just the fair value gaps. Then with those screenshots, you go back. So now in this case, this up closing range here, that should support price, I'm assuming, until we reach this sell side liquidity. You go back and you look at all those screenshots and look at where those order blocks were held, either in the expansion towards your target or the expansion previously just within the structure. So if you look at some of those macro reviews, I actually need to screenshot the ones, what's the last one, 1010? I'll take the screenshots from yesterday and today and send those over. But you can look at all those expansion moves. The one after 1030, all those down closing ranges being held up. Same thing with the picture before that. We have the up closing candles for the most part are holding until we reach that short-term sell side. But yeah, order blocks, understanding order blocks I think is one of the harder things to do. Comes with practice. For value gaps, easy to understand. Breakers, pretty easy to understand. The continuous order block formation and how to use them properly is a little bit harder. So I'm watching to see how we maybe reject off of this. So this up closing range confirmed it there. We're going to move lower off this fair value gap. So I would like to see a wick off of this. So this is a point where I would be comfortable trailing a stop at this swing high. So if we were to come knock that out, that's perfectly fine. Something like that. That's why time is important though, right? So kind of just meandering around here. Still trading within this IFG and the sibi. Let's look at the higher time frames. Here's your 3-minute gap. Touch and leave. Just barely filled the 3-minute, and we're starting to trade lower. Start looking at the 5-minute chart. So let's take these annotations off. So between 9:30, this candle right here, and 10:30. So you see the order blocks forming. Drawn liquidity, obviously we have huge gap down there. So once that 10:30 candle forms, we'll be looking to see at any of those order blocks. No fair value gaps we're seeing as potential entry points. So really just order blocks that you'd be using for the 10:30 macro. Going into 10:50 as well. Nice SMT divergence right now. Yep, that's true. Yes, taking out their highs. We have high resistance liquidity around here too. So watch for potential rejection off this. Got bearish SMT. Instantly traded back lower. So I'm watching the 3-minute gap right now. If you start displacing lower, we'll definitely head for this short-term low. We have relative equal lows down there. Still holding. There's a tiny fair value up there we just traded into. Need to trade all the way through it and then look for sell side. But relative equal highs up here too. Let's start clearing this up now. It's better. Trading into the rejection block there. Let's see if the 5-minute gap formed. No 5-minute. Nothing on the 4. It's just consolidating. Let's draw the fib out. Here's your expansion move up. Clearing out the entire sibi. So looking for upside. Let's look at ES. Starting to climb up. You can see the down closing range is there being held. Right? Down closing range. Their down closing range. So you'd like to see NQ start to pop up aggressively. Look up for the highs there. So that's your 6 sister concept. So we're looking for a 10:30. Now this is one of the things where 10:30 is approaching. We're already about to sweep out the AM high. It is somewhat of an extended range, and we're already on one side of it, so you could be looking for retracement. Like on, yes, it's a bit clear to see, right? Large extended range between 9:30 and 10:30. If you want to draw your fib from the low of the session to wherever the high is formed. It's also liquidity pool below 50%. That's potential. If you look at 3-minute order block there, 5-minute, you have a gap down there. So whatever the high wants to form, potentially looking for downside. Obviously, we do have the high up here on the daily or on the 4-hour we're looking for. So watch that down closing range, order block here, and the fair value gap. In Q, using the inversion sibi and the bisi that just formed right here. Definitely not the cleanest though. After 950, there's really nothing in there that I want to trade. Look for potentially a deeper retracement. It's here. We'll see where this candle closes. So candle closes pretty bullishly. We'll look for expansion now. So there's your 10:30 candle. We need this to form. But if you were to look between 9:30 and 10:30, what reference points do we see? So we see an order block here that's being respected, and we see another order block here confirmed. So if we can either sweep this and we see a rejection, look for 50% of that range. Otherwise, I would assume that these order blocks here would just hold and we start to accelerate further upwards. But it's still good to remember we're reacting off of this daily level. So if you look at the daily chart, the 15-minute, a lot of times you'll see a retracement off of this, especially if you sweep liquidity, right? Think about the those market maker models. When you see a partial point within premium, a lot of times you see a retracement into short-term discount. So if you take the fib here, here's your discount level. So that could be tomorrow, could be I don't know really when. So there's your new high that just formed. Still waiting 3 minutes for this candle on the 5-minute. Relative equal lows down here, you gotta watch that. Yeah, still popping up. Use that bisi there. Looking for 45.15. Let's take a look at oil. Maybe there's something interesting on oil. Nope. More or less the same thing. So that concept works on all commodities too. So if you look at oil, you want to use that same concept. That also works. So between 9:30, 10:30, where are the reference points? We got really no fair value gaps within here, just order blocks. So if you close above here, potentially use that as an order block as we accelerate upwards. Now I don't know if there's any drawn liquidity higher, which is the most important thing. You have a swing high up here at 79.74 on the 15-minute chart. That's about it though. So you just be watching. Two minutes left on that candle. Not really liking anything for the 10:30, 10:45. Unless we reject and close all the way through this bisi, there's nothing I'm interested in. So 1050 will be when we'll look next. But we do have short-term liquidity down here, sell side, swept it out, got a breaker formation. I'm interested to see. Let's see. Target, here's your -2, -2.5. Man, so even on these shorter scales, entry given here off the order block, right? So down closing candle. So we have our sell side liquidity swept out here, right? So your breaker would be your low, high, lower, low. You take your A to B leg. In this case, it's just this -2, -2.5 up here. Then we have our B to C leg. So from the high to the low, there's ES sweeping out there, 45.15. Take that, drop your time fib over it. Give your entry between the -1 and -1.5. So you see we confirm the order block. You could also see this as an entry point, but right outside the range. Confirm the order block, tapped into it just with a wick. Can enter long there. Looking for 20 as the minimum. Here's your 20 points. And then right between -2 to -2.5, you see the -2 to -2.5. So between these red lines, this is kind of the sweet spot. Right in here. You see that range hit. And I'd be looking for the 4 standard deviations to potentially hit the -4, but probably won't happen. So there's your 1030 candle forming. Already formed. So 930 to 1030. Whoops. Reference point, order block right here. Really the only thing. So if you want to trade all the way down there, obviously your fair value gap here as well. Just lined up with that. 5-minute fair value gap, 3-minute. Layered. So if you wanted to dip lower into that, could be a potential long opportunity. Now I know there's a 1-minute order block here, but I'm favoring the 5 minutes. So if we can run down into there, potentially dipping into the 5-minute gap, that would be nice. So there's your 5-minute order block tap. Well, that's why I'm just waiting for 1050. Four-minute filling in for value up there, in line with the 5-minute order block. %50 of the range. Right in line with that salsa liquidity pool. Got super close to that imbalance. Trade back up. So that's why your higher time frames take priority, right? So if you're just looking at the 1 minute, we already see 2 down closing candles close through. But on the 5 minute, we're just tapping to the 5-minute order block. So it's good to kind of have that time frame matrix in your head. You either can just pull it up on other screens or just have it layered like this, where I have 15-minute chart in the 1 minute. I would say the 3 most important ones for like intraday scalping and things like that, I would say is the 1 minute. For me, obviously, that's kind of my bread and butter, but I trade a lot of times within 20-minute intervals. So this 1 minute chart is nice, but the 1 minute, the 5 minute, and then I would say the hourly as well. I would say maybe skip on the 15, but The 15 is also really good if you're just looking at intraday price action. I would say if you could, the 4 would be hourly 15, 5-minute 1. But if you had to pick between the hourly and the 15-minute, I would say the hourly is a little bit more important. Just because if you look at the hourly chart, you can kind of gauge the higher time frame sentiment a little bit better. And obviously those hourly for value gaps, things like that, definitely more important. So projecting off of that 5-minute order block pretty nicely. Be looking for this down closing range if we form one. Pop up through it, tap back into that, 20 points, something like that. Move some of the stuff. So I'll watch this down closing range here. If you can confirm it with this nice up closing candle like that, potential order block if you want to wake into there should be a quick expansion. I would see that as a propulsion block. Watch for new highs, obviously 20 points from here up to there roughly, if you wanted to use that as your model. Now lining up for 10 and 50, if we were to sweep this high one more time, you could be looking for potential reversal. Obviously we still have that huge gap lower. A lot of sell side liquidity kind of pulling up here. This low from 933 hasn't been retested. Really no sell side liquidity sweep past that, right? We have sell side here, trailed it to maybe here, 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 right? There's a lot of stack liquidity, kind of what we saw yesterday. So just watching, if we want to pierce this one more time, it's perfectly fine. So it traded up, closed through this last candle here. So if we wick into it, should see expansion off that. Obviously this consecutive order block here. Did we close above it? We did close above it. So watch to see how we may want to use this as acceleration upwards. At least for the short term. Obviously this swing high is what I'm watching. It's not really a clean candle closure though, right? It's like just tiny a bit over it. It's not enough where I would say it's a validated order block. Tap into there again. That's why it's good to just wait for 1050, right? Just rough price action, really between 1010 and 1050 here. This entry here off 1027 may be the only valid one, but that's pretty rough. Still trading within this 3-minute gap. Nothing in here really I would say is tradable. So watch to see if you want to potentially fill this 5-minute gap. If you trade all the way through on the 1 minute, I'll be watching to see if you want to take out the sell side. Still holding this order block though. It's just boring stuff, in my opinion. Yeah, the 15-minute sauce. I agree. I've never actually traded on the 15-minute chart. I haven't traded on anything higher than the 5-minute. But if I were to trade, and it'd only be a couple times a day, or a couple times a week rather, I think it would be probably the 5-minute and the 15. Using the 15-minute chart, probably looking at London session and then New York continuation, kind of those higher time frame daily profiles, things like that. If you haven't watched the London session profile video that ICT released, I think it was month 10. I could be wrong. That's a great video. It's not only good if you trade London session, but if you trade the New York session. So this order block here, I would like to see a hold. We got a nice candle closure above it by a decent amount. Should hold the price. It's really good if you want to understand what the New York session is likely to do, because depending on what the London is, that's kind of why I use this 15-minute chart, using these ranges here with Asian and London session. It kind of helps me grasp what price is doing currently. In that video, he really goes in depth about high probability setups for the London session, the kind of models that form, as well as what you can expect with the AM session, so between 8:30 and 11 o'clock. There's your new high. Now look for the 20 points. Yeah, it does. Yeah, it has clear profiles as well. Okay, sweet, month 10. Yeah, so I think it's the London, I don't know the exact video, but oh nice, TFO just released a new indicator. I think it's, I don't know what I was saying. Oh, there's New York profiles, there's the London closed profile, which is between 10:30 and really like 12 o'clock. But then obviously there's like different things you could look for, like if there's right at 12 a.m. if we start moving, you can see London session do something else. If you see 2 a.m. movement into a parent dealing range, you can see that as an entry between 3 a.m. and 4 a.m., which is that silver bullet hour. So a lot of gems in those older videos. Took out the AM high, didn't get the 20 points though, kind of annoying. But you can see the reaction off that 5-minute order block, right? If you even want to just target that New York high, we just swept it out right there. But that 10:30 range, you just take, what's the order flow doing? Is there any gaps? Didn't fill this gap, instead we just tapped off the order block, could enter long there, and then target even just the new high, which is a good 16 points, I think, something like that. So look, 15 points, can't be mad at that either. Still watching for the 20. But you get the idea, that in itself could be a model. So we'll look here at the 1050 macro if you want to continue. Kind of consolidation, daily buy side. Yeah, ES got that buy side up here, we're filling this gap. Let's look at an Q. Yeah, right up here. This is such a crazy move to me. Literally made that quarterly shift and we're up, what, like 10%, 12% in the past 2 weeks. That's like 2 times the S&P return from the last 2 years. But yeah, we are dipping into this. So I think there might be a weekly. Nope. So filling the rest of this gap here. I know. That'd be crazy. Yeah, if you're able to, if you trade on the daily, I'm sure those banks are loving it right now with these longs. Crazy. What is that? Yeah, 1760. The banks are absolutely loving this movement. Like, there's literally been no retracement either. I thought we were maybe, if we took out the swing high, we were going to dip into the inversion fair value gap and this gap here. But we really just accelerated. Or maybe even a movement off of this. Like, these past 2 days, I was not expecting it to climb up like this. I wanted to see, I posted it yesterday, I wanted to see retracement back into some of this range. At least taking out the short-term sell side that I've marked out here. But I was clearly wrong. Just accelerated all the way up. I totally forgot CPI was today. I thought, for some reason, I thought it was tomorrow. Yeah, hopefully no one was in any positions then. So approaching 1050 macro. We have this for value gap we're filling right now. Gonna move some of this clutter. Let me screenshot this really quick. You can send it for the. So this is your 5-minute order block. Can add that to the backtesting as well. So watching to see how we fill this gap here. So 950 macro or 1050 macro started. Preferably, I do want to see shorts. I don't like taking longs this far into premium now, especially since we've already swept out buy side multiple times, and the sell side down here has been largely unrivaled. Right, here's your AM low all the way down here. We're good, what, 100 points off it? So if you want to take your fib from high to low, there's your first target within discount right there. Could move. So actually, let's keep that on. Nope. It's a little bit cleaner. So watch how we fill this gap here. If we can close below it, we have an order block here. Version order block as well. So like that, we're trading through it. We've got this bearish order block here, supporting price. Watch for this 5-minute gap to be filled. It's a nice target. It's only like 10 points away or something like that. Then obviously that swing low down here, relatively equal with the previous swing low. Starting to trade back. So this tap into the inversion, could have used that. It's not really the cleanest 1050 macro, I will say that. I'm favoring downside for the time being. Let me remove some of this stuff. So this is your first partial within discount. There's your acceleration off it. So watch how we react off this 5-minute gap. When will reversal based on time-based fib? I don't know what you mean. I think you're just saying when we use the time-based fib, or yeah, can you clarify? Watch this inversion gap as well. Tapping into this tiny fair value gap up here and closing below. So bearish price action looks like it's expected. I'm watching the swing low here, obviously within the gap as the first target. This order block as well, could use that. And then the swing low. Now watch this down closing or up closing candle, sorry. Up closing candle if we can pierce through it. I'd like to see that used as a propulsion block. We are approaching the wick of this candle, so could use that entire candle as a propulsion block. 50% of here, right below that swing low. Now remember, we do have the ES SMT divergence at the lows, right? So if we go back to ES, SMT divergence here with a 930 open, kind of a nice market maker sell model, if you want to look at it that way. Especially if you want to use this A to B leg here, entry maybe within over here, if you want to make it really, really clean. Also, whoops, let's go to this, to -2, -2.5, -4, probably the standard deviation I'll be looking at right within this gap. So that is a potential. Take a look at NQ. So maybe the AM high here, or sorry, the AM low. Starting to fill this 5-minute bisi. I'd like to see a trade through. I'm watching this order block as well. So I need to still trade and close below there. Look at the 5-minute. 3-minute gap. I've already closed below this breaker, which is good. If you look for downside, there we go. There's a nice expansion. So this order block, first partial. So here should be propulsion block. Nice expansion off that, right? Propulsion block used. So we have a up closing candle, traded back lower, validated another up closing candle that approaches or digs into a previous order block as your propulsion block. So you can see we closed below it, wicked up into it there, and speed right off there. Watch the SMT. Nice expansion. So watch how we tap off this order block. There we go. Now we should see sweep all the way through. Might want to reject off this, just short term, maybe tapping into this inversion gap. But I'm looking for this, and then if you really wanted a far terminus, then here would be, I think, valid. Or even this swing low. We can see that 950 macro, sorry, 1050 macro really played out. So we kind of had chopping around up here at 1030. We're looking for a turtle soup back into 50% of the range. We've got the turtle soup right up here. So soup of buy side, looking for further expansion. So trading through the discount end of this order block, just nice, really nice expansion off that. There's your low risk sell right off the fair value gap and the inversion fair value gap. And so far it's been smashing through these. Watch the fair value gap here as well. Right up here. This becomes inversion, assuming we can close below. 13 seconds left. See the 3-minute. There you go. So watch for a tap into there. Stop would be, I think, above this high. That'd be fine, or even above this inversion on the 1 minute. If you were looking for a premium to discount, be a little bit further up. Take a look at ES. So starting to fill the gap up here, tapping to the order block, right? So bearish order block, fair value gap. That combo is typically pretty good. So I like to see expansion now lower. 50% of this range. I didn't even draw this out properly. This swing low, right at what, 1007. We'll put an alarm down here, see if it wants to run down. Digging further into premium on NQ. Just waked up into that higher sibi, right up there. I think it might have been premium. Oh, sorry, right here. Yeah, dug into premium there. Now, if this candle body can close within this lower fair value gap, and we see another candle that closes outside of it, I'd want to see this swing high left intact. That'd be your proper swing high, right? So we have a candle here, lower high, higher high, lower high. It's kind of like that 3 candle formation I want to see. Then after that, should see expansion lower, taking out this swing low into the dollar sign, drawing liquidity. Also a nice market maker model. Let's take a look at the fib. Whoops. So entry within here. Yeah, this one's kind of rough. I don't really like this one as much. To get an entry right outside that time, but the breaker isn't clear. You have high, low, higher, high. Here's your breaker formation. Also within the breaker. It's nice. So we got the 3 candle formation there, but it didn't close below. I want to see it close below. So gotta be careful. Tapping to the inversion gap on the 3-minute and the 5-minute. But I want to see speed. If we get speed through the low, we also have this consecutive order block range in here, right? So once we close below it, should really just see wicks maybe tapping up into it, and then we see expansion off of it. But I would assume that this is your second stage distribution in the curve, right? If we have this is your smart money reversal, we have a tiny gap here. That's your low risk sell. Then you have a first stage and then second stage. I assume, unless this is your second stage with the order block, then we really dip lower. So it's depending on where you draw it from. That's in the so this is the closer I wanted to see. It's in the market maker video that ICT released. I think it was the last video he did. So this run up here is not what I want to see. I want to see it continue lower. Preferably not taking out this high now. Oh look, it's support returns resistance. So yeah, if we can confirm this, close all the way down here, that'd be really, really nice. We should see just a quick expansion down. Yeah, within macro time, within a second stage distribution, within a market maker model, I feel like this is kind of a guaranteed draw on liquidity. I'd be very surprised if these relative equal lows weren't ran out, at least by 10:30. I think that would be kind of random. But within these market maker models, a lot of times you can see consolidation around 50%. So if you measure this out, here's your 50% level. See our consolidating on the right side. That's normal. A lot of times too, within that consolidation at 50%. Now this is on any time frame. You'll see Judah swings form. So a lot of times within consolidation on 50%, maybe on the ends as well. Sometimes you see these Judah swings. Sometimes you also just see expansion out of it. Like here we have a Judah swing lower, taking the sell stops before moving all the way back up. Here another consolidation, but you can see we just kind of expanded. Still trading within this 1 minute gap. Candle buy staying within it. Really nice precision there. Starting to dip lower now. There we go. So now watch this up closing range as well. This up closing range, if we can get all the way through it with speed. We'd like to see speed through that level as well. It's just very reluctant to move lower. Still watching this swing high. Don't think we should pierce it. It's just not the cleanest price action. But probably you want to see acceleration. Speed through the low. Let's take a look at that ES. ES got SMT divergence there. So really got to be careful now. Watch where this candle closes. If we can close below the gap, it's great. Still closing within the gap. Let's look on these higher time frames. 2 minute. So 3 minute, we just tapped into it there. Nothing on the 4, nothing on the 5. We have a tiny for like up here. May want to run that out. Be watching that. 2 minute, 1 minute. 2 minute basically filled the entire thing. But if you want to look at the 5, move this. There's your gap on the 5. So right up there. Could see retracement up. If we just do fill that BPR, see how there's kind of a BPR up here? We have this bisi and then a sibi that kind of overlaps some of it. That's a really strong indication of a reversal on any time frame. So I'm watching to see now if you want to sweep out that short-term high, tap into the 5 minute, then potentially trade lower. Yeah, market maker sell model as well. Original consolidation down here with another swing low. I don't see a reason why it would start shooting up for the high again. ES already ran out their high, which is this dotted line. Wonder what this buy side liquidity level is though. Yeah, I don't really see a reason why we return all the way up to the swing high. Yeah, 50% of this range, we are dipping into discount. 50% of the entire opening range is a little bit further. That's what this swing low is. Obviously below that, if you look at the higher time frames, no really gaps. So within discount, you can be targeting an order block, a swing point, or a gap. Preferably, you want to see liquidity. That's kind of the optimal one. Second optimal would be a gap. Now, if you have stock liquidity, so something like a swing low, relative equal lows that are pretty close together, and there's a gap that's either below it or above it, that are decently close. It's not super far away where you would need a large expansion move, but kind of just slightly underneath it. So if you see these relative equal lows, if there was a gap like right here, if we wanted to sweep through there, that would be perfectly fine. We're still kind of consolidating on the one. The 5 minute, I'm looking for potential sweep up into this gap up here. But you can see it's just clear consolidation, right? High to low. There's the wick into the 5. Do we get it? It's the high on this candle. 877.25. We got the same exact one. Need at least a tick above. There we go. So filling the 5 minute gap. Like to see a reject lower now. For the majority of that 4 minute gap. Oh, is it 3 minute? Yeah, 3 minute gap and a 5 minute gap. All the way up to the premium end there. Buying or selling, I'm just sitting this one out. I don't really like it too much. It's not clean enough for me to really enter in this. I mean, gun to my head, I'm liking the market maker sell model in here, but there's really nothing in here that I'm liking too much. You have to watch how we respect this 5 minute gap. If you can close this 5 minute candle lower, then you can be looking for continued downside, but this kind of expansion up further, more unless you just one candle up, one candle down. Outside of the macro time too. Watch this order block here. It's kind of the last line of defense. Yeah, trading up through it. So we can wick all the way back down. Might as well preserve capital. There's no point in trading in conditions that are not favorable, right? It's always tomorrow. Yeah, so probably end the stream there. I'm not interested in the market maker sell model anymore since we're turning this far into premium of this dealing range. Yeah, rest of the day, I'm not expecting a whole lot, especially since we have CPI today. It was just kind of a poor morning session. Really, this trade up here was the only thing that I liked. Anything past that, yeah, preserving capital, right? So until I see you guys tomorrow, stay safe. As always, DM me if you have questions or want backtesting data, things like that. I'll post the live stream recording probably by the PMs if you're interested in that. So until I see you next, stay safe and peace.